Good morning, everyone. Welcome to the London session on TopstepTV. My name is Deeyana Angelo, aka Marcus Dee. I've been trading for 17 years. It's going to be nearly 18 very soon. And I've been trading futures for about 12 years out of that, mainly specializing in things like crude oil, gold, so precious metals and energies mainly, but also DAX, which we're still waiting for on Topstep. All right, so I'm going to be on a combine for the rest of the year because that's something that I do most of the time. Around about the 15th of December, I will wind it down for the year and go enjoy the holiday season rather than sitting here and constantly clicking buttons. So you want to be present with your loved ones. You don't want to be that person with, a laptop looking for trades when, most people will be away. And in any case, most people with deep pockets will be off with their families too. So they for sure will not be trading. So to remove some risk, you can always go to either your practice account or your combine accounts and basically get some experience over how the markets behave around the holidays and on holiday days. So that is the first order of business. Let's have a look around the markets to see whether we've got anything happening. We had a pretty big day on Friday, so one thing to note is that the markets are not going to be open on Christmas Day, but they might be partially open for the 24th. So let me just have a look at what's going on. I know that we're not going to be broadcasting tomorrow and Wednesday, and then we're going to be back for Thursday, Friday. And then similarly next week, there's going to be a bit of a break. I think again Tuesday and Wednesday. So basically just in and around the most important holiday days, right? So let me see if I can drag out the schedule. Did they post that already? I'm just trying to see. Okay, so the markets are actually closed on Tuesday and Wednesday. Now, next week, the markets will be closed on January the 1st as well. So just don't... I would say, even a day before, just, go and enjoy the new year. Like, why do you want to be trading? Find some friends, All right. Yeah, it says Tuesday close. So if I go over here, I mean, it's Christmas Eve, right? So here we go. We have Tuesday, December the 24th. Markets closed. Wednesday, December the 25th, markets closed. Yeah, so don't shoot the messenger, right? So closed tomorrow and the next day. So naturally, there's not going to be any broadcast for those days. I'm going to be back later this week for the reversal challenge on Friday. And I believe I'm also going to be on later on today because our lovely risk managers are all away. So we're going to be taking some time to maybe look at some stats from traders, because obviously I'm going to be running a VIP team in January, and they're going to be posting more about that during the main broadcast. But yeah, it looks like I'm going to be on instead of shoulder tap today. So yeah, that's pretty cool. All right, is there anything of note happening across the board? I've been kind of keeping track of natural gas because it's been moving well. It is known as the widow maker. Why? Because look at this. it does these like huge jumps where it just opens 3 to 5% away from the previous candle. So obviously if you were short into the end of the market and you hold your positions overnight, that is why natural gas is the widowmaker, because look at this. It just jumps and it opens with a massive gap, and that happens fairly frequently. Now, it has been trending really nicely, and it has a decent amount of volatility as well. So it is definitely an option for us in 2025. Now, when it comes to the London session, let's have a look. I mean, obviously DAX is making a move. DAX has already moved about 100 ticks. That's all right. Let's have a look at some ranges first. Oh God, crude oil is quiet. It's only 40 ticks for now. What are the equities doing? Not much. 57 ticks movement for ES. Let's have a look at maybe YM. YM has moved about 92. So that could be an option. There's a dog barking outside. It's going mad. Bernie, be quiet, please. Yeah, my Bernard's being a very good boy. He's at the window and looking. Yeah, quiet. Yeah, good boy. That's very good. He didn't actually kick off. That's interesting. I thought we were gonna have like dog barking. Cause yeah, Big B is in here and watching. No, here we go. Yeah. All right, I'm gonna have to go deal with this because I don't know what's going on, but they're just going crazy. Yeah, I don't know what that was all about. So obviously there was a dog barking there, and then Bernie didn't kick off, but the rest of them did, and they just started howling and going crazy. So yeah, I had to go and tell them to shut up, basically. And in the meantime, we had Bernard being a very good boy and just doing a small little barky and then kind of going, what's up? Why are they all going crazy? It's like, I don't know. It's not Amazon, guys. I've got the Amazon Ring camera, so when there's movement on my door, it comes up, and there was nothing. There was literally just like two. I could see the two small poodle thingies running outside the door and barking. So they probably kicked off. Yeah. Yeah. So yeah. Anyways, let's continue. So EMS says. I don't think I've seen oil. Yeah, this is not oil. I wish that this was oil. So this is natural gas, right? NG. And it tends to trend more than crude oil. But one of the things with crude oil is, like I said, it has dried up quite a bit. So it's very difficult. Whenever you don't have movement in anything, you will be sat in a trade for like 3 hours and you're just looking at it. And it doesn't really move. It's like you're like 10 ticks in profit, whoopee, after 3 hours. So that's not the kind of markets that we want to trade. And it's extremely difficult to make anything work. In fact, when you have a market that is that slow, you're probably better off going into the options and doing like some spreads and stuff, because it's going to stay range bound. And we have seen that in crude oil. We can go and have a look at it. We have seen that range, like ferociously range bound, as Dolby likes to say, even on the daily chart. I mean, look, this is not really the kind of market that, now if these were like 300 tick bars, that would be acceptable because you have enough range to sort of scalp it either side. But unfortunately, all of these are about $1.20. $1, like, it's a very, very tight range compared to what we had. I mean, really, even like 2-3 years ago when we had 300 tick ranges, and then during COVID, everything went a little bit crazy. So we had 700 tick ranges, 600 tick ranges. And at that, like, if that's the case, I don't mind it being range bound, because you just take one side of it and you go scalp it for 100 ticks and you'll be fine. But unfortunately, when you have 100 ticks to work with for the entire day and everything is very slow, it's just going to exhaust your mental capital. That's the only thing that's going to happen, right? And you're not going to have a lot of profits. Same thing happened in Forex like 10, 12, 13 years ago. Which is why I went into futures, right? And futures products, like they obviously fluctuate in volatility and liquidity depending on the interest. And this year, for some reason, all of the year, we have been stuck in 100 tick range. Like now, if you get like 117 ticks, they're like, wow, crude oil went up. And I look at the range, it's like literally 117 ticks. And I'm like, what? What sort of twilight zone have I walked into? So, crude oil, whilst it's been very nice for me for 12 years, this year I'm kind of not very happy with it. So this is why I've been looking for some other things to trade. Now, obviously, on my other accounts, I do have the ability to trade DAX. So that has been my bread and butter this year. And I've been kind of looking at natural gas, trying to see, whether it behaves in a similar way. And I can say that, yes, it behaves in a pretty similar way to crude oil, with one caveat that Thursdays tend to trend. So that's usually after the inventories are done, you tend to get one big trending day. So on Thursdays, there's a much higher chance of that post and cut reversal trade into the euro close not working out and just kind of going. But for everything else, they have options activity as well. So natural gas is very good when it comes to that. When it comes to the options activity on natural gas, we do have that $4 call area. And that might be of interest. So I don't necessarily want to fight this big uptrend move that we've had in natural gas. And crude oil, like I said, be very careful if you get involved with it. It is a bit tricky. If you look at RBOB, it is actually a crude oil twin. So whatever crude oil does, RBOB will do it better because it has a high volatility and still maintains that 400 tick range, right? Um, so we have a question here. Let's have a look. Easy donk. Is the purple aura around you created intentionally, or is this a natural phenomenon created by the color of your favorite drink? Well, my favorite drink is matcha green tea, so surely it would be green, no? Yeah, so it is natural, guys. I radiate light. That is how it is. You know, wherever I go, I just have this this purple light around me. Yeah, Ribs has one as well. You know, it's just what you eventually get after being in this industry for so long that you start to radiate certain lights, and your aura becomes more visible. Yeah. Yeah, I used to actually have two lamps behind me, which were blue and purple, so that it was like creating this like nice effect. But I'm still doing like the house stuff, and I have to make sure that I don't have too many things to shove into the corner whenever people are coming over to look at the house. So yeah. Merry Christmas to you too. Yeah. It's a very good question. Very good question. All right. So yeah, careful with the crude oil. Like I said, our Bob has been much better for me. And when it comes to London, obviously it's it's a bit tricky in and around this time of the year, especially, but also in general, because this is not their main market. So let's see what crude oil has done. Sorry, what gold is doing. Even though I looked at it before we went on stream, and I went, it was a bit quiet. So let's see. Gold. Where are you? Here it is. All right, so gold tried to go lower into that area of demand, reversed, very uncomfortably so, because if you see the daily chart, there was this area here. You can see I was short in the combine for the FOMC. And then this wick would have been horrible to trade, because you were like, okay, we're in demand, let's go up. And then it obviously smashed back down, only to reverse again. So these kind of movements, it's generally a 3-bar reversal. It's a morning star, to coin a phrase. Whenever you have this wick down, it sort of convinces you that there are some sellers around, so it is very, very difficult to trade. Especially very difficult to see the reversal that ensued the next day. But we now do have that 3-bar reversal. Now, a couple of things could happen here. We could go down to retest this new demand area. It's like a reactionary demand. So if I can ever find the rectangle, then we can mark it. There it is. So yeah, one idea is that we retest this new market shift area. So what is this? It is the reaction from the previously existing area of demand where the buyers appeared with quite some force. And then we tried to go into it, failed, reversed again. Ideally, when this sort of thing happens, you want to see another follow through. But to make things, as miserable as possible for people who might not be that skilled in reading supply and demand in this sort of detail, what they tend to do is they retest what I like to call the conterminous line. Conterminous means common something, right? Common price point or a common feature of some sort. So I decided to use that phrase to basically mark the edge of this area, the proximal edge, so the closest edge to the price that you run into as a potential area for a further reversal. So if we don't get just a straight up move from here, there could be a chance of retesting the 2610.5 area, and then that newly formed offspring area stretches all the way down to just sub that round number at 2597.1. So that remains an area for further longs. We did go below this area of resistance, and we're trying to retest it. So there is a chance that we have some new supplies and new buyers sort of crouching and waiting to make everybody's life miserable again. But I can see one supply a little bit higher up. So this could be their target area, 2667. Now, are we going to get there without much drama, or are we going to get a retest first? Nobody knows, which is why we turn to the profile intraday, and then you effectively just look for reactions of whatever is going on within the market sentiment. And you know, I like to have like 3 or 4 hypos on the day at different levels. So I don't actually like to see my hypo that has like either or setups. Like, let's say we're breaking out of the initial balance, and I'm like, well, it's either going to go up or it's going to go down. It's like, oh great, very helpful, Dee. That's just like so clear. So I like to have predefined hypotheses where the levels give me a clear-cut direction. So let's say if we extend a lot on the day, let's take the hypo that we go all the way up. Well, I would expect us to exhaust the average ranges at some point up at like 2667. And then maybe to have an options related level. And I can see there is one at 2670. So if we manage to get there, and there's like an options gamma wall or something that we can use to further create confluence with algorithmic ranges, then we can say, okay, this is a short here. Like the probabilities at this level at this time is a short. However, when I have the wishy-washy things in the middle of the range, which is based on a breakout of initial balance, I have to be very careful what time of day I'm going to do those, because the breakouts, let's say you do it on crude oil after 9 a.m. Central, and you know, you may be waiting for a little while to see whether it's really failing the auction. So now you're approaching the euro close, and you think you can see a sustained auction, so you're going long, and then the euro close comes in and puts a wrench in the works. So why? Because there's a very high probability of, let's say, something like crude oil reversing after 9 and 10 a.m. Central into that euro close, and your sustained auction is just basically you get a paper cut, or even worse, full -1R. So it's not a very good idea to just run breakouts willy-nilly whenever you think you might get them. In fact, the best chance of any sort of a breakout is maybe in equities during the initial balance, and I hate trading during the initial balance personally, but that is when you can get some pretty extended moves, right? And you can get very quick movement that is going to traverse a million ticks, gazillion ticks in like 3.5 seconds. So that might be your jam. It is not mine because it's very quick, and I'm not really looking for those sorts of breakout trades. However, when it comes to reversals, well, that's where my jam is, and therefore I like to create my hypos away from current levels. So for example, like I said, if we go down, I have a level at 2610, 2609, and then I will try and match that intraday. So right now I can see that we have 2620 as a potential port support. Failing that, we have the next area of interest at 2600s. So if it doesn't turn around up here intraday at 2620, we actually have room to fall all the way down to 2600s. And at that point, I will be looking for more longs, and those are cheap longs, because look at it. Like, look at the trade location here. Long time frame, large time frame. So if you get to anywhere near this low, you're still inside that previous area of demand. So this can be a market maker stop run area. They love doing these sort of things where you have a larger area. We've had a reactionary thing. They go into it, they take it out, take out the reactionary low, then they turn around and then they go. So that would be an excellent hypo. And then the third hypo, typically I will reserve for a breakout trade at some point as a lower probability setup. But the time of day has to be absolutely right for that to happen. Or another way to do breakouts is just to wait until they appear and to be sure that you are leaving single prints. So anytime I do breakouts, I'm in them very, very late because I want to confirm that they have exhausted some sort of an average range, that we are holding above or below initial balance with quite some strength, and that the single prints that were left behind are not going to be chewed through. So I have to wait for more information. And then typically I don't trade to look for pullbacks and then going with the trend. I will just look at the dome and I will not particularly time it because you expect the momentum for the trending move to account for a poor choice of a trade location. So basically it's point, click, and pray. Yeah, PCP trades. That is that's something that I coined in one of my YouTube videos, and then we sort of adopted it on TopstepTV. So PCP trade, point, click, and pray. If you have, a day like Friday where everything just keeps going. All right, let's see some more questions. MS says, questions, is it smarter to restart my combine early January after the start of 2015? That's what I'm thinking, instead of fiddling around with a lower volume and possible weird movement in December. Yeah, absolutely. That will be the best choice. You will see that many of us on here on TopstepTV are suspending our sort of live trading for the year. And that will be the same thing for anyone looking to do more combines, right? So don't fiddle around. Like I said, go and enjoy the holidays. And then just go and, really ideally second week of January is when things start picking up. You will get a lot of balancing of portfolios. You will get more new buyers, new positions. So you might want to be looking out for the open interest type of information, which Hogue gives you as well. And and it's it's always better to wait for the time of the year when you know that the volume is going to be coming back. Anytime we have weird volumes, it's anyone's guess what they're going to do. Equities have this has this habit, I suppose I would call it, to run higher on very low volumes. And in that case, you would be able to see some irregular volumes that are not either like very low or just a lot of volume churn and just keeps going like one way. So yeah, I would say wait and start your combine early 2025. So just whatever you've done this year, wipe it from your mind, take the good lessons and the bad lessons and try not to repeat them in the new year, right? I know it's difficult and everybody occasionally struggles with that. But, this is the time for reflection. This is the time for collating and aggregating everything that you've learned over the last year and then carrying that experience over into the new year as best as you can. So instead of making the resolutions to, exercise, get tidier, blah, 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 all of that, why don't you make a resolution that we're going to follow the rules in the new year, and that maybe you can pick the product that is played the best for you, that is played out the best for you, and then take that into the new year. So that can be our trader resolutions, right? Yeah. MS says, Paul and Jay were looking at GC 2 weeks ago and they're like, it's so perfect, 100% long. I'm like, on a daily, I'm also salivating. It's too perfect. It's going to be dropping soon. Well, I know that Hogue was in on this, so he read it really well. But once that's happened, I didn't really have a good read on gold, what's going to happen. And this was then into the FOMC, so I was short into that. Actually, in my live account, it was really annoying because I tried to go short and then it stopped me out. And then I tried to go short again. And then, I don't know, it just wasn't going. And then I closed it and that was it. But then I went here to test some hypos. And I was actually waiting for that Nikkei trade that I did overnight because that's what I usually do. I don't really enjoy trading FOMC much. Sometimes if there's like a committed move, then it's fine. But post FOMC, I love those. And like I said, I have the setup on Nikkei overnight that goes for like a bazillion ticks. Unfortunately, I couldn't stay awake for most of it, so I took a good chunk of it, right? I took $3.5 grand. It's not to be sniffed at, but that could have been like an 11K trade if I let it run. But I knew I had to do the London show, and then it was already like 4 a.m. and I was just like, I can't. I'm just so tired. And then it just ran from 6 o'clock in the morning my time and would have reached my ultimate target. So that's a shame, but I'm not going to be crying over that. I'm instead going to be happy that I captured 3.5K on the trades that I could have stayed there and babysat, rather than crying over things that happened while I was asleep. And I'm not like Dakota, I cannot sleep through a trade. I'm sorry, I can't. This is why I'm an intraday trader, so I don't have to sleep through positions, because something happens in my brain and I always want to see what happens, and then I wake up in anxiety and I'm like, what's happened to the trade? So, back in the day when I was a swing trader and when everything was running like a million ticks every day, I was pretty happy to sleep through. But having said that, I was much younger. I was like 27, 28. But yeah, now I just, I have problems sleeping anyways. So anytime I can get some sleep, that's actually a good thing. Tostino says, I passed my combine. How do I stop trading at suboptimal times? Let's talk about the performance metric called hour of day. So I know that we have the metrics on TopstepX, but you can export your trades into some platforms that are a little bit more sophisticated. I believe that TradeZella and Edgewonk both have hour of day analysis. So drag out all of your Topstep trades and import them into either Edgewonk or into TradeZella, right? Why? Because those are dedicated. I mean, I know that we have this for free, which is great. So we have our analytics for free, but for now they still haven't added some of the it's a platform in development. It's a very new platform, guys. Like I said, it usually takes many years to get platforms even to this stage. So what they've done in the short sort of 12 months is nothing short of a miracle, and they keep adding new things. But until such time, if you want to improve to that degree, Tostino, I would say, look at your performance by hour, okay? So in Edgewonk, that's somewhere in, I think, Chart Lab, and then you have this area called performance by hour. When you look at that, it usually becomes glaringly obvious what times of day you suck at. And that's going to be individual to you, because I know that I suck for the New York Open. So literally, that's 2 p.m. my time. I'm over in London. So between sort of, what would that be in Central Time? I think 8 a.m. Central all the way up to 9 a.m. Central. I suck. Like, most of my losses whenever I try to trade through that come from that time of day. Like literally that 1 hour where I just start getting chopped up trying to trade the Open. So I stopped, right? So I don't really do that anymore. And then through some of the combines, I went to test whether anything has changed. Nothing's changed. I still suck at that time of day, right? So when you exclude the biggest hour of day where you lose most of your trades, you will be surprised how quickly your P&L starts to turn around. So use stats, use your own performance to fish for weaknesses and then exclude them one by one. Now, you might have some other issues during that time. It might not be, oh, it's just the fact that, it's that hour that you're not great at. It might be that, the speed of the market movement is messing with your mental capital. So you're like trying to get in, you get stopped out, but you're right on direction. So you got wicked out, and then there are different reasons as to why people lose. Some people might be using a very wide stop, and then they don't want to get out. They just sat there looking at the trade going million ticks into drawdown, and they do nothing. They still wait. Now that's fine if you're on a micro and you have enough cash on the day to do that. But generally, if you're using a larger stop like I like to use, it's a disaster stop. And it's only there to give you time to decide whether the trade is correct or not. Now, some people remove their stops. So I don't know what your particular problem is around certain times of day. But step one will be to identify the times of day when you're not great, and then to exclude them, go do something else. This is why all of us have different hobbies. I renovated this entire house while I was trading some, DAX and stuff, because, DAX is not like NQ, right? DAX, you can sit on trades like for 3-4 hours at a time. I've had DAX trades that have gone for 6 hours easily, right? Yes, it can move a lot, like we've seen that on Friday. It moved like over 300 ticks, but it did so over a period of a number of hours, right? It didn't do it in like 3.5 seconds like NQ. And then if NQ is doing something similar, just going up, up, and up, that can also take hours. But unfortunately, because people want to size up, and, NQ easily does these wicks of about 100, 150 ticks up and down, it's extraordinarily difficult to stay in on such moves unless you're either sitting on like a couple of million size and then you're trading, 4 NQ. That would be fine. And, if that's the case, I actually can sit on an NQ swing with no problem whatsoever, because I know that the drawdown that you're experiencing in a trade is only a tiny fraction of the entire account. So I'm going to say this. Your ability to stay in a trade long enough is directly proportionate to the size that you're in compared to the account balance. Okay, so the pain point your pain threshold would be more accurate, becomes smaller, and your tolerance for pain becomes smaller the tighter your risk allowance. Okay, this is why these combines and these, the prop firms are great, because it actually teaches you how you behave under real pressure. It's like when the money is running out and you're in with too much size, can you handle that? And most people can't. And then you have Dakota. But, most people, when you have a 3K or 4.5K max loss limit, you won't be able to stay in trades long enough if you see that it's gone up, $1,000, and then it's wicking against you by 500, 600, 700. And to be fair, even with some other firms who have intraday trailing drawdown, people are always complaining about intraday trailing drawdown. Now, Topstep has the end of day drawdown, right? That's a great thing, so you don't have to worry about that. But there is still a diminishing return where if you're in a trade and you can't stay in because your emotions are all over the place, because you can see the price wagging up and down like 50% of your entire risk allowance, which these days is probably a maximum loss limit for some people, because, who the hell puts a personal daily loss limit is what you're going to hear from most slightly more novice traders. I mean, somebody asked the other day for group coaching, is it okay to ever trade without a stop loss? No, never. I mean, it doesn't matter what you do, don't trade without a stop loss, ever. Like, if you're running an investment, that's okay, because it's calculated in a different way. If you are, using an investment platform that is meant for share dealing, the way they calculate positions is always going to be reflective, especially if it's the underlying rather than a leverage product. So it's an actual stock that you're buying. They are calculating your risk, assuming that stock goes to zero. So that's the stop loss. Now you can place a stop loss higher up. That's entirely up to you. But their own calculation of what is your maximum risk allowance and, how much cash you can lose, that'll be it. You put in, 100 shares. And then if the price goes to zero, that would be the ultimate stop. So in that case, it might be okay to just not put a stop loss because you're presumably aiming for positions that will last for many years, right? You're not doing anything that's like, related to outperforming the market. You're effectively just tracking the underlying. It's a different style of trading. But what we're doing here, this is trying to outperform what the underlying is doing. So you have the S&P 500 index, we're trading the derivative futures. And because of that, we have a leverage product that allows us to control risk in a better way. And in a way, it's like the Olympics of investing, right? It's like the 100-meter dash rather than a marathon sort of, 7 hours of slogging it out. So it's very sensitive to any inconsistencies you have in your trading. This is why I'm not very happy when I see people trading 40, 50 trades. There are very few individuals in this world that can make that work. And if you see, like some of the best scalpers that I've worked with, they never trade more than about 2 or 3 trades a day. And they're scalpers, right? You see that with Nick for a Tick. You see that with Rips. Does he do 50 trades a day? Absolutely not. They're both snipe one trade, reset and wait. Snipe a second trade, reset and wait. And for the most part, they will be done. So scalping is not about 1 million trades per day, right? So hopefully that can put you on the right path of trying to fish for those weaknesses and to see whether you can improve them in the new year. But step 1, look at your stats. Look at the hour by day and exclude the times. Go cook, go walk your dog. Now we have these custom limits where you can lock yourself out. Now I do have, in Ninja, another thing that does all of this and more. And I know that Topstep will very soon catch up to that because I can see what they're working on. It's great. But you can actually put, custom limits. You can. I wish that they would actually give you a time of day as well. So I might actually put in a request for that to choose the actual hour or a couple of hours in a day that will lock you out. That would be so useful. That would be amazingly useful. But they don't have that yet. However, on the other platform, I can have the option in the settings to go lock me out from this time to this time. And then you try and click and everything's grayed out. And you're like, what's happening? Because sometimes, you might forget about that. And you will be like, oh, why am I? Oh, yes, of course. What's the time? Okay. So it's not that it's like a crutch or anything. It just makes things a little bit easier. At least it does for me. And in the new year, I do believe that Topstep risk tools are going to be so amazing, right? They are bringing in trade size limits. They're bringing in number of trades. Now, keep in mind that for now, this platform does count every scale in and scale out as a separate trade. So when the feature does come, I don't know whether that's going to be fixed. But I know that even on my other platform, they're still counting each scale in as another trade. So be aware of that. So for example, if I'm trading 3 lots and I want to do 3 trades per day, however, I want to scale in, that means immediately if I scale in from 1 to 3, that's going to be 3 trades. So for 3 trades, it's going to be 9. Okay, and then if you're scaling out, same thing. Now, usually I don't like scaling out. I just take everything. But I do like to scale in, right? Yeah, Michelle says, no, let everyone trade without a stop loss on an eval. You need to feel the pain of the market running against you so fast that you have no time to react. Then you will always trade with a stop loss. Yes. Yeah, that is very true. However, I would make an educated guess that whoever already found prop firms, they've already had that pain, Michelle. So this is why they're with prop firms, because they realize they can't really do certain things on their own. They need some risk controls, and they're like, hey, actually, instead of blowing up my own money, why don't we go to a prop firm and make all the mistakes with the same amount of pressure, either in a combine or an XFA, where you get that feeling of skin in the game because you've put in some peanuts for the accounts and you care. But it still brings you the same emotional awareness, right? You're still a lot more aware of what's happening rather than a simple demo account. That's the difference, guys. That is definitely the invaluable experience that combines and XFAs bring here. Yes, the ultimate goal is to learn how to trade in the live markets, because I would also make an educated guess that most sim traders have no idea how the live markets behave, and they think that filling 15 NQ contracts is just like done like that, and then they come to live, and guess what? They put in the 15 lots, and it's like there's a delay, and they're like, Topstep is lagging. And it's like, it's not Topstep. Like, I hate to break it to you, to burst your bubble, but that's the real market. Why? Because if you don't have enough contracts on the dome, like for example, right now, we only have 1, 2, 4 contracts, 8, 5, 7 on every single price point. So what's going to happen when you try to do 15 contracts, or 5 for that matter, 5? Well, it means you have to get all of the 5 contracts to find the counterparty to your trade. So if there's no 5 or 10 contracts immediately here, it's going to wait until it gets there, right? It's going to wait until there are contracts. So if you have gaps, if we have like gappy markets, then it's going to wait until the price migrates past the spread and then to fish with. That's how you get slippage, right? Slippage is not some like, magical thing that they kind of, just spring upon you. It's the liquidity of the market. And if you don't understand that, you're in for a very rude awakening, which is why, sim trading is nowhere near live trading. I mean, come on. People who are trading London and they're like, now it's a quieter market. We can do pulled pork 15, let's go. Yeah, good luck with that in the live, because you'll be waiting all of this. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So this would actually fill you. If you want to get 65, this couldn't fill you until 63, 63.75. Because there's not enough contracts, right? So you would be like, well, why? Or if it goes up, it needs to find the counterparty. It's going to fill you around 66, 67. It depends whether you're buying or selling. Obviously, it's always the opposite side of the dome. So if you're buying, you need to have enough contracts here to immediately fill you. If you don't get that, you get slippage. So it is. Amos says, if it's possible, Deeyana, can you explain your indicators and how you use them? I do hope I'm not... No, you're not on a place to ask. Now, we are trying to stay focused on Topstep, okay? So just keep that in mind. So I am going to show my indicators, but I'm not going to stay there for very long, because obviously this is TopstepTV. It is not the Market Stalker D live stream. But I am going to, I'm going to show you what my other window looks like with my indicators, right? So I'm just going to clean it up a little bit, and let's do DAX, because, we don't have DAX yet on Topstep. Actually, that brings me to my plug about Eurex. So So please upvote Eurex. Keep upvoting Eurex. Tell your mom, tell your dog, tell your cat, tell your friends, anyone. They can literally just do the Google login or Facebook login, and they can vote. So if we get this to about 400 votes, we might actually get Topstep. But for now, they keep pushing it. And it's, it would be very helpful for everybody over on this side of the world in Europe to have DAX and to have Eurex products. So please, 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 upvote. Please. My Christmas wish, is there such a thing? My Christmas wish is to get Eurex on Topstep. So let's have a look at the indicators that I use on the other side. Full disclosure, it's my company, okay? Not the firm, but the actual tools that I'm using. So here's DAX. Now what I like to do, I like to use the large time frame things. So the first step is I have the 4-week volume profile on this chart. Now you can easily make this into a volume profile or the overall volume, this was a gap, or both. You can also highlight the volume area, so that's something I have as the first step. The next step is I have my supply and demand zones, which are multi-time frame mode. So this is the first time frame, so it prints all of them. Now this is a low time frame, it's a 30-minute chart, not really interested in that. This is the next 2 time frames up, so this is a 4-hour chart, and it displays zones. I can see that there's a stronger zone at 20,215. There's a very strong one that we actually bounced from on Friday during the overlap, which is when I usually look for trades on DAX. And that's the second one. So you get all of these lovely zones, and you don't even have to go anywhere. But if you stay on the general time frame, you can see that you have the same thing displayed on here. So it shows you all of the supply and demand areas automatically. Now, if I'm going down to the intraday time frame, the first step is to have my value areas from the previous day. So this is the profile. Now, I'm going to switch off everything else, and I'm only going to focus on what the profile is bringing me. This is the current day profile. Now, on the right, I have the TPO profile. However, I don't really like looking at just the letters. I asked my team to create a graphic overlay that's going to overlay over the candles. We were actually the first company to do this, and since then, many people have copied us, right? It's just how it is. You come up with something, people like it, and now we have a whole bunch of firms that are doing a similar thing. However, most of them are still, like especially the native ones, I find them very clunky. Like for example, on the Ninja Trader, market profile is very clunky. If you look down here, we have a summary for the market profile. Again, we are very unique in that way that we have the open above value. If it's a normal blue color, it means we've opened in range, but not out above value, but inside yesterday's session range. If it's a dark blue, it means we've opened outside of value and outside of range. We use 70% for the value area calculation. However, that is a very, very adjustable. I know that Robert Cooney uses 80%. Some platforms use 78%. And you can actually control a whole bunch of stuff over in this section of inputs. Okay? Literally whatever you want to change, you can change it. You can change colors. You can change the size of the value. You can change percentages. Like it's very, very customizable. So we're very proud of what we've done. Now, the final thing that I have is my algorithmic ranges, which are which are dots on the chart. So rather than using ATR for a measure of supply and demand, I actually like to use dynamically projected average ranges. So what does that mean? It means that over the last n number of days, we expect the market to move up or down by this much. The bigger lines are the full 24 hours, and then the blue lines are just the regular trading hours. And that resets the regular trading hour calculation for the algorithmic ranges, resets automatically at the start of every session. So you don't even have to do anything, which is why automating your processes to this point, that's all these tools do. You know, it's still not going to tell me it's a buy or a sell, but it's going to tell me how far we got to, do we still have some space? So now what DAX is doing, it's really trying to go into a sustained auction. I think we're probably going to go into another trend day at some point. So I'm not really itching to do a short today, purely because of the way the daily chart looks. We had a big recovery, and even though we didn't quite make it, this is still a big pin bar. Sometimes pin bars on long time frames have very high rate of failure, but on the daily chart, on an equity index, they carry an additional measure of confluence. Then maybe we have some buyers stepping in. So I'm going to have to go and analyze like open interest and see what's happened, whether the buying on Friday was actually new buyers or whether it was just shorts covering after the FOMC smashed this down massively. So yeah, those are some of the analyses that I like to do. And that's pretty much it. Like all of the other things, I have the Blatek VWAP, which also has a settlement inside it. So you can actually control when the settlement line is going to be done. But we already have that on TopstepX, so we don't necessarily need that. And yeah, those are my flagship indicators that I use. My company there is called Blatek. I think everybody knows this at this point. Right now, we're working on Ninja indicators to translate all of that from MetaTrader 5, which I use on MetaTrader on AMP via CQG data feed, which is something they provide. And we're trying to get it into Ninja. We are expecting to have probably one of the indicators, at least a market profile or something, for towards the end of Q1 in 2025. But yeah, that's what I use. That's what it looks like. Those are the charts that you used to see back in the day before TopstepX became our main platform. So I use TopstepX as my execution platform, dragging out those levels into my my TopstepX, right? So I do spend some time drawing some tools if I can be bothered on the day. Sometimes I can't, so I'm just like looking over here, tell you the levels. So it just depends how tired I am, you know, how burnt out I am, and all of that good stuff. TraderX is asking 50K combine, can you trade 50 micros? Yes, but why? And only on TopstepX, as Bruno already pointed out. Has anybody ever told you that you look like Aubrey Plaza? Who's that? I don't know. I'm sorry. I don't know who that is. Right. Interesting. So I've had a whole bunch of people telling me depending on, you know, I suppose the angle, that I look anywhere from Jennifer Love Hewitt for some reason, young Mariah Carey for some reason, and now Aubrey Plaza as well. Okay. Yeah, I mean, I suppose I can see it. Yeah. There's something to it. Yeah. We all have our doppelgangers in the world. But yeah, I can see it. Yeah. Okay. What's the time? All right, so we're going to be coming to an end. I don't see anything worth having yet. Let's have a look at YM just before I sign off, because YM might be an interesting one for the overlap as well. Yeah, apparently young Mariah Carey. Yeah, not now, but when she was younger, apparently she looked similar to how I look. Yeah, I do get Scarlett Johansson sometimes as well. Yeah. AB Mike. Yeah. Hassan, hope at least no one says you look like Shrek. You should see me in the morning. Just joking. Yeah, no, I mean, thank you guys. That's very kind. Very, very kind. But yeah, YM. So on the daily chart, we have similar 3-bar reversal, right? So if we can get down to some levels that I have of interest on YM, for example, I have 43,012 as a potential area where I want to see some longs stepping in. And that would match with the 3-bar reversal sentiment that we're going to go higher, but still have some sort of a retracement. So I'm going to be watching that for maybe the overlap, because before we get DAX, I still need to find something that I'm going to trade through the overlap. So the search continues until we get Eurex. Let's just get over the chat to see whether I've missed any questions. I hope not. And I hope you've learned something. Different trader says, I hope they finally add alerts. Yeah, that would be very helpful. I'm sure they're going to come, Drawdown lockout features from your high water mark is something I'm looking forward to. Yep, that would be good. Yeah. Okay, I think we are done. I'm going to be on today for a shorter segment instead of shoulder tap. All of our lovely risk managers are away on for, like, obviously for the holiday seasons. They're out of the office, and I'm going to be doing some stats. So we're going to go over some trader stats in the expectation of my VIP group. So if you want to see what that looks like, come and join me, and maybe stick around and chat if we pull up your report so we can discuss. It's going to be usually along the lines of maintaining a higher risk reward, not over trading, not trying to be a market maker. So whoever asked about the 50 micros, maybe don't do 50 micros. Like if you get over sort of 2 or 20, 15, 20, that is already the sign to effectively go to the minis. There is absolutely no reason for you to be trading 50 micros unless you want to be like that guy that would have accounted for like 15% of micros volume per day. He was doing like something like 1,800 micros, just like 150 micros every time, because that's what Topsetp allows. That is not the way, like, your commission fees. I know that on Topstep is when you're not live, we don't have commissions, but you have them in the live. Okay, just be very careful that, because for now they're still going through a brokerage, and that brokerage has micros fees, right? You can't get away from that. So again, we go back to that combine. Sim versus live not being the same. Thank you so much for being here, guys. So I will see you later on. Great questions, great crowd. Let's continue to work towards our skills in 2025. That also applies to me, especially in these products. Definitely keep an eye on volatility indexes. That might be very good pointers as to what's moving, what's not moving, especially if you engage in trading alternative products like platinum, copper, etc., because those volatility indexes can give you a good idea of what is moving, whether there's a potential for a trend day or not, or whether it's just watching paint dry sort of situation. But at the same time, if you're a newer trader, don't hone your skills on a million products. Pick 1 or 2 that move well. I can see why NQ might be a choice there, but NQ is probably not something that I would suggest for newer traders. But I know you guys are obsessed with it, and girls. There is a lot of liquidity there, but just the sheer amount of wicks that product does, it means that it will mess up your mental capital in a way that is going to make it harder for your skills to grow. And here's why. When something is eliciting fear in you, fear actually prevents brain development. So keep that in mind, okay? Fear prevents brain development because all of your energies go towards the fight or flight and not towards creation of the new neural network. So in order to grow as fast as possible, we need to minimize fear and we need to make sure that we're looking at the markets objectively. And the only way to do that is to trade something that is reasonably stable and that doesn't poke into your fight or flight response very often, okay? Not never, obviously, you will still get moments where you're like, what the hell happened? But generally, it's very good whilst you're learning to not experience fear and to stay really objective, kind of like being an accountant, gathering data, putting things down, seeing where you suck, where you don't suck, and trying to systematize whatever you're doing as best as possible. So I'm going to leave you with that. I will see you later. I'm Market Stalker D, aka Deeyana Angelo. I will see you later for the trader stats during the main broadcast. This has been TopstepTV. Take care.